Okay, thank you, Sanat, and welcome everyone. A pretty ominous title we've got this year, Sailing into the Storm. And you might ask, well, what are we worried about? Because if you think about what's happening in markets recently, there's a lot of, it seems like there is growing optimism around a big US fiscal stimulus. Oil prices have been rising with the OPEC agreement, which is good generally for EM. And now it looks like the ECB is going to continue buying bonds for longer than we thought. So, you know, why do we have this title, Sailing into the Storm? Well, essentially, I would say, in a nutshell, we think the risks to our forecasts of growth in Asia are stacked to the downside. And I just want to talk very briefly about some of this before I hand you over to my colleagues that will go into more depth. Firstly, on China, I would emphasize that we have for next year pretty stable growth. Yan will talk more about it, but we're forecasting 6.5% growth. First time we've been above consensus for a while. But I would stress that there are downside risks to that view, the risks of setback. In a sense, we have decent growth because we think the government will do whatever it takes to achieve around 6.5% growth in a very important political year. We don't expect much on the reform front next year. We do think the economy is going to remain addicted to credit and that growth will be driven to a large extent by fiscal stimulus as well. So there are risks around China, and I would say one of the potential pressure points is going to be capital outflows. Credit defaults is another one. Now, besides China, there's the US and President-elect Trump's inward-looking policies. In a way, these policies, while they could be good for the US, they might be negative for the rest of the world, and in particular, I would say after Mexico, Asia is next in the front line in terms of risks around an America First policies. Now, the one that gets a lot of attention is trade protectionism, and yes, Asia has very open economies. A lot of the proposals have been against China, but don't forget that a lot of the value added in China's exports comes from other Asian economies, so it would spread to affect others. A second risk is around geopolitics. There are potential flashpoints in Asia, whether it's the South China Seas, the Korean Peninsula. So that is very hard for markets to price, and typically it's priced too late. But I think that is a risk, whether the US is going to increase or decrease its military presence is very uncertain, and Trump has said that he is going to be unpredictable on foreign policy. The third, and probably the most important one, is the Fed. With a much more bigger fiscal expansion in the US. But not just that. If there is trade protectionism, it will raise import costs. If there is cuts to immigration, it will raise wage costs. If there is unwinding of Obamacare, it could raise drug prices as well. All of this is going to be inflationary. Our US team now expects 2 rate hikes next year. Doesn't seem like much, but the Achilles heel for Asia really is higher US rates because Asia has built up so much debt over the last 8 years. So we've seen some capital outflows, but potentially that could continue. We could see foreign currency debt mismatches, and it could feed into tighter domestic conditions and then lead to credit stress. So they're kind of the risks we are worried about, and that's why we think it will be a challenging year to stay on the even keel. Let me conclude with 3 things. One is inflation. Even though we have growth weak, we think inflation is going to pick up in Asia. The second point I would make is on monetary policy. We see Asia significantly decoupling from the US Fed next year. We think several Asian countries are actually going to be cutting interest rates, including Korea, Thailand, Malaysia, India and Australia. We only have one hiking rate, and that's the Philippines. It's partly because we think Asia will let their currencies adjust, because exports we think are going to stay fairly weak. But also the rise in inflation is more cost-push driven, it's not demand-driven. So we think Asia central banks will let inflation rise a bit. And another key reason is the debt. I keep coming back to the debt. With very high debt, it's a big risk if you raise rates and you actually start triggering credit defaults when the external environment is so weak. So that's a key theme of our forecast, is a decoupling of monetary policy between Asia and the US. The final thing I would say is that for looking a bit further out, casting out into the next 3 to 5 years, longer term, I would say the big bright spot in Asia is what I call the Asia Cubs. And here I'm talking about India, Indonesia, Philippines, and maybe some of the new frontier economies like Vietnam, where I think there is a lot of potential for growth to continue to rise, and potential output growth could be around 8% or so in 3 to 5 years' time if they successfully attract more investment. And conditions are looking more and more ripe for these economies to attract investment. They have young populations, low urbanization rates, low incomes and wages, and I think a lot of that investment could actually come from Northeast Asia. So that's an interesting divide where we think these some of these Southeast Asian economies, the bigger ones, are going to do very well, and potentially there'll be a divide between these striving cubs and the aging tigers in Northeast Asia. I'm going to stop there and hand you over to Yang Zhao, who's going to give you a bit more deeper insight into our China outlook.